Hello. In this video, I'm going to discuss the difference between business and economic profits. It will follow the reading on page 17 in the textbook. That's section 1.4. I'm not going to use the example from the reading. I'm going to use my own example, but you can quickly see that the examples are very similar to each other. So let's go. Here's the example. Suppose you have a building and you use that building to run a pizzeria, and say you made $100,000 in revenues with the total cost of your labor and supplies equaling only $25,000. And additionally, as an alternative, you could have earned $50,000 working as a manager elsewhere, and you could have rented your building for other purposes for $40,000. So we need to discuss two sets of things: the distinction between explicit and implicit costs of running the business, and hence the distinction between the business and the economic profit. So first of all, explicit costs. If you just look exactly at what you have to pay to run your business, those costs are explicit out-of-pocket costs, and they will be taken into account when you calculate your end-of-the-year profits. So those costs would just be the $25,000 that you have to pay in labor and supplies. If you want to calculate how much you've earned running your business, that will be what we call the business profit, which is merely the difference between your end-of-the-year revenue and the explicit cost of running your business. Alternatively, this is also sometimes called accounting profit. And so in this example, that's going to be the difference between $100,000 that you've earned minus the $25,000 that you've spent on labor and supplies, and that will account for $75,000. So this is basically what you will show in the end of the year as the profit of your company, and this is what will be taxed, for example. So your business profit is basically what you earn minus how much you spend to produce it. And if your business profit is positive, that means that while your business is generating value, you're taking something that's worth only $25,000 and turn it into something that's worth $100,000, collecting the difference, which is good news. On the other hand, when we're talking about implicit costs, we ask ourselves the question of what else could we have done with the resources available to us? So the resources in this example being namely your time, which you could have spent working elsewhere, and also the building, which you could have rented for a different purpose. And so implicit costs talk about the value of the next best alternative with the resources. Of course, you could have worked multiple jobs, and so I'm looking at the job that only generates the best possible salary for you, and also the highest possible rent. That would be the best use of the building. And so if you calculate the implicit costs, they would account for $90,000 in rent and salary. This is what you could have earned if you chose to do something else instead of running the pizzeria. And so if we wanted to calculate the economic profit, we would take the business profit of $75,000 and subtract the implicit costs, subtract the value of the next best alternative from it. So your economic profit includes your business profit. That's going to be the revenue minus the explicit cost part. But on top of that, it subtracts the implicit costs from your business profit. And so if we take $75,000 of the business profit and subtract the $90,000 in implicit costs, we will get an economic profit of negative $15,000. So your economic profit turns out to be negative even though your business profit is positive, which means that, well, you're generating value by running the pizzeria, but it's not the best use of your resources. You could have made more money by doing something else. So positive business profit is not the end of the story. We always want to look at the alternative. What else could have been done with the resource at hand? And this is what the economic profit is about. So if we will run into examples where a business's economic profit is going to be zero. That simply means that the next best alternative for the business will earn exactly as much as the business is currently earning. Whereas a positive economic profit would mean that what you're earning as a business is better than your next best alternative. All right, that's about it. Thank you.